Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Good morning, everybody. Welcome to the first finance edition of Wealth Coffee Chat for 2025. I hope that everybody had a wonderful break, wonderful Christmas, and a wonderful New Year's. On Wednesday, it was actually it was Lunar New Year. So I want to wish all those celebrating the Lunar New Year a Happy New Year. And may the year of the snake bring you and your loved one joy, prosperity, and good health. Morning, Justin. Thanks for joining me this morning. As always, I'd like to start with a finance joke. So this morning's joke is a mortgage broker is someone who can find you a great deal as long as you don't need the money. Hey, Cass. How you going, mate? That is funny yet true at the same time. So when life is good and everything's going well, it's actually the best time to actually borrow money. So we'll have a chat about that in a later Wealth Coffee Chat. I wanted to start with, a lot of news that's coming out at the moment is that, rate cuts, is there a rate cut coming? Are we going to see a rate cut in Feb? Is it happening or isn't? The data around inflation. Inflation for the December quarter is down to 2.4%. So there was 2.8 in the September quarter. So everything is indicating that there will be a rate cut next month. Now, which banks are saying yes? Westpac are saying yes, there is. They're expecting a rate cut in February. ANZ are also saying that there's going to be a rate cut in February. CBA have said the rate cut may come in March. Boo! We kind of think everybody's ready for this rate cut to come through. Bunty and James, thanks for joining me. What I wanted to actually chat about today is, with all the talks of rate coming this year and, possibly rate cuts coming in the next month, how do we actually prepare for these rate cuts and what does it actually mean for you when it comes to preparing to borrow? Now, I know rate cuts mean that your minimum monthly repayments will actually be reduced. What I would recommend is that you actually check with your lender to make sure that they actually reduce the repayments. I've had clients in the past where their interest rates have dropped, but the repayments have remained the same. So definitely worth reaching out to your brokers and your lenders to double check to make sure that that is actually happening. Now, with the potential of between 2 to 4 rate cuts coming over the next 12 months, we could be looking at a drop of up to 1% in the cash rate, and hopefully the lenders will pass on the full 1%. What that means is that there is an opportunity for us to be able to prepare for those rate cuts and actually see when it is going to be the best time to actually go to proceed with a loan application. What I would recommend is that have a talk to your broker and actually ask them to do some projections. So do some servicings based on, one rate cut at 0.25, one rate cut, another rate cut at 0.5%, another one at 0.75%, and one at 1%. Now, this will give you an idea of what impact that actually has on your lending, because it will affect your existing borrowing as well as your ability to increase how much you can borrow for new purchases. So that's the first thing I would recommend everybody have a chat with their broker about. The second thing is to take this opportunity to review your budget. Now, over the Christmas period, there may be some increased spending, holidays, etc. What we want to do is now reset that and come up with a budget that we're going to stick to over the next 3 months, because this will dramatically help how much you can actually borrow by ensuring that you reduce your living expenses to as close as HEMS, which is what the banks use as the minimum living expense. Now, you can reach out to your brokers, actually get them to find out from your particular income and family situation what HEMS is going to be for the different lenders, and then use that as a budget target. So when you review your budget, you'll be able to maximize how much you can actually borrow and be better prepared for when it's time to actually submit the loan application. Another great thing you can do, and another thing I recommend, is also getting a copy of your credit file. You want to make sure that there's no surprises that are on your credit file. How many times in the past, I've had clients who assume that nothing's going on with their credit file until we submit the application. The banks come back and say, hey, look, what's going on here? And it's not until then that they realize there was, say like a default, even though it has been a small like telco default. We've had to get that sorted out, and it has impacted the ability for clients to proceed with a purchase of a property. So let's get all those that information now while we don't actually need to borrow, so that we don't have any nasty surprises when it does come time to submit a loan application. The other thing that that I recommend as well is being able to get a property report for your home and for your investment property. So let's get an idea of how much the value of the property is, what your LVR is, and then make some plans around the structuring side of the loans. Morning, Chris. Thanks for joining me this morning. Another thing that banks love to see and they don't really talk about is your ability to show them that you can save. Saving means that you have the ability to show to the lenders that you can make the repayments on your proposed loan. Now, savings can come in several different options. Now, if you've got an existing loan and you've got an offset account, you can put all your money into there and show that that account is growing, which then obviously shows the banks that you can save, as well as being able to save the interest on your home loan as well. So, there's a double benefit there. Now, if you don't have an offset account, doesn't mean you can't do the same thing. You can use redraw similar to how you would use an offset account. So let's put, a certain amount of, work out your budget and then work out a savings plan and put the money from your transaction account into the loans redraw, and that can actually help show that you've got the ability to make these repayments. Now, for all those who are self-employed that are listening to this, if you still haven't gotten your 2024 financials completed, get that done. Now, I know there are lenders like Westpac and St. George who are still accepting 2023s, but you're limiting how many lenders options you have available. So get your 24s completed. Now, I've said previously in the past, I've said previously on my other Wealth Coffee chats, is you don't need them to be lodged. Okay, get them completed and finalized so that your brokers can actually work out your ability to borrow based on those figures. Now, if those figures work in helping you achieve the loan, then depending on which lender, we may need to get them lodged, or they will just ask for an accountant's letter to confirm that those are actual final financials and those are the ones that are going to be lodged. The other thing that you can engage your accountants to help you complete is interim financials. Now, if you know that the business is running a lot better in the 2025 financial year, so over the last 6 months, the business has been booming, you request the accountants to complete interim financials so that we as brokers can submit that to the lenders to show them that the business is actually growing, and in some cases we can actually use the projected income for 2025 based on the last 6 months financials to help get a deal over the line. So all this is to help increase your borrowing capacity, but also the lenders you can speak to. Now, just a final note in regards to the rate drops. Should the rates drop in February, the RBA will announce the interest rate drops. I hope that all the lenders will pass on the full rate drop. In the past, there have been instances where they haven't passed the full 0.25 rate drop. But don't expect the announcement and then the banks to follow up with their rate drops straight away. Now, they will announce, usually within 24 to 48 hours, and usually the big banks first, of how much the rates will drop. But you've just got to take note of when that rate drop will actually apply. And in the past, from what I've seen, it usually takes between 2 to 3 weeks for the rate drops to actually hit your actual loan account. But what I would say, and I would recommend, is to keep an eye out on when the actual rate drops and then the date that actually will apply to your existing loans. Wonderful to hang out with you guys again. I look forward to an amazing 2025. If we get the rate cuts next week, it's going to be a great start to the year. Now, I just wanted to share with you, since this is Wealth Coffee Chat, my son brought me this for Christmas. Not entirely sure why they thought I needed this bigger cup for my coffee. Maybe it's because the more coffee I have, the happier I'm with my kids. I don't know. But I thought I'd share that because It's a fairly big coffee cup. So once again, thanks guys for joining me, and I look forward to catching up with you all next week. Have a wonderful Friday and an amazing weekend, and I'll see you all next week.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.